What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 5th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's Macro Monday, we're going to be covering three major topics. I'm going to be showing you some of the key charts I'm going to be watching on my radar to know when it's time to actually go long on altcoins to make exponential returns in the event of a potential altcoin cycle. The second thing I want to talk about as well is taking a look here at Bitcoin's price action over the last week and analyzing the post-ETF flows over the last 7 days. Did we see continued traction, and is it enough to really justify a further move in price? And last but not least as well, we're going to be diving into the macro, taking a look at oil markets, which had a significant drop over the past week, as well as the bond market, and what it may be telling us about the macro perspective. We got a lot of things to dive into in today's video, so if you happen to enjoy it, consider dropping a like. Let's go ahead and kick things off. So I want to talk here a little bit about the altcoin market, because I know a lot of people are looking for those altcoin plays that are really going to be bringing in solid returns. And while we've definitely over the last 7 days had some moves here in the top 100 plays, it is important here not to lose perspective. The overwhelming majority of cryptocurrencies are not keeping up with Bitcoin's price performance. Bitcoin being up around 2.1% with the recent continued move off of the 100-day moving average back a few weeks ago. And very few plays here are actually above there. Many plays in which are actually in the red here in single digit to double digit territory. Again, nothing to be panicky about here, but when we're coming towards the important question of an altcoin cycle, we need to get serious here. I'm not talking about some coins making double digit moves over a week. I'm talking about the broader altcoin market as a whole making double digit, if not triple digit moves in a single week. That's the kind of stuff that I get really excited about, and I want to make sure I'm positioned for if in the event that it happens. So let's go ahead and talk a little bit about here. Altcoins right now as a market are continuing to decline here right now at the moment, at least with lower highs and relatively similar lows here as we get the bounce off of the 100-day moving average that we talked about back the other day. But there are a couple charts here that are really going to help us to get towards the fundamental question. I don't care if altcoins are moving down or up here in the past week. I want to know, when are we going to get the altcoin cycle? Well, there's a couple key charts that we can watch here. First off, if we're seeing Bitcoin dominance continue to expand here and generally set higher lows and higher highs, this is not a good sign to really go long altcoins in any substantial matter. It doesn't mean you can't be making trades. So long as you're setting the standard here that against the BTC pairing, those altcoins are outpacing Bitcoin, then by all means continue to speculate or invest in altcoins particularly. However, if they're not keeping up with it, as Bitcoin dominance is indicating here that the overwhelming majority of altcoin market cap, that's including Ethereum, XRP, BNB, all the way down to the small caps, are not keeping up with Bitcoin, we need to favor a Bitcoin position, if anything, in this market. And there may be an opportunity here for Bitcoin to continue expanding and garnering more dominance up until around the 58 to 59% percentage mark here into Q1 of 2024. That may very well be the top in Bitcoin, allowing for altcoins to actually have this liquidity surge where there's a rebalance of dominance into new plays, and we start to see some serious 5-10x moves in a very short period of time, maybe even some 15-20x moves. I don't think you're going to get too many plays that really go beyond that, just being realistic with you guys. But again, there may be very well another bonk or other type of meme coin craze, or some substantial alternative L1 or L2 plays that really start to garner momentum post this ETF launch. But the big chart I want to show you guys, there's really two that I want to discuss here as we go throughout today's video. Actually, about three key charts here, ways to look at dominance and performance in the market. One of them is one of our metrics here that tracks the total aggregate dominance of Bitcoin, Ethereum, USDT, and USDC. Now, the reason we track this here is because this takes into account the stablecoin liquidity, which is absolutely essential in order to provide the kind of surplus of capital or liquidity to prop up prices in the market. And outside of that as well, it tracks the dominance alongside stablecoin dominance of Bitcoin and Ethereum. The reason this is important is because a lot of altcoin pairs are traded against Bitcoin and Ethereum. And when Bitcoin and Ethereum do well and they garner a lot of market share and steal a lot of that market share from the kind of altcoin space, don't take the language too serious, but just again, they're taking that market dominance, right? Then when we get into a situation where the dominance of these four cryptocurrencies, these two stable coins and two leading cryptocurrencies by market cap, when they become an overwhelming large sum of the market, it usually means that they've not only appreciated in price, but outside of that as well, that these cryptocurrencies and stable coins are an abundance versus the existing altcoins in the market, all the other cryptocurrencies out there. And this gives an opportunity window where, as we saw back in January 2021, where you can have a major reversal here, a huge speculative wave when things get to almost like a breaking point, when we got to nearly 90% dominance in these 4 key plays here. So essentially, there's a lot of liquidity circulating. Altcoins are undervalued at that point, and it allows for these kind of moves. Now, I don't know if you're going to get something as severe as this here, but my point here is that we've still possibly got some time where we can hold up in this range. We've seen that this is kind of the range above 80% is where you might want to consider building into altcoin positions versus Bitcoin, where you can start to expect those big sizable moves. But I care most of all about getting a trend flip here. I care about, even if I'm not getting the absolute lows, I want to see that we're able to break through, for example, the monthly trend magic here. We're getting very close to it, but we even got close to it back in December, but unfortunately weren't able to get the official weekly close below that pivot line. So because of that, right now, Bitcoin is still the favorable play, but keep that on your radar. You can add this by watching BTC dominance, ETH dominance, USDT dominance, and USDC in TradingView. Now, another thing I wanted to show you guys as well is taking a look here at the altcoin season index. This is a public index that you guys can find online. It's a really cool resource, but it's important to specify here that I'm looking at the year version. There's a couple different versions here that are based on, kind of I think a weekly, a monthly, and a yearly time frame. But generally speaking, I like to watch the yearly here because when you get a substantial yearly breakaway here, this is when it can really start to get interesting to go long altcoins. We saw this in 2020 when we started to really set in an established higher low and then start to rally here going up towards the 75-point range. We're on the lower end here. That's good in the sense that there may be room and potential to expand higher. We're not per se overbought historically against the performance of altcoins, but we are going to need to see here that Bitcoin momentum and that recycling, and then eventually showcasing that performance here, getting up towards the mid 30 range to signal that, hey, it's time to get on the ship. Time to start speculating. It's time to start riding the wave. Again, we haven't seen that yet here. And that's why I always tell people that people are saying, oh, this is an altcoin cycle and we're in one right now. History proves in this case that we are not in a typical altcoin cycle by definition, right? We're seeing some altcoins do well. That's great. Not saying you can't trade them. Not saying that people haven't made some life-changing returns, right? That's happening in crypto one way or another, but on the grand scheme of things, people are losing against Bitcoin right now. There's been a little bit of an improvement here since October, but it's definitely not an altcoin cycle by a long shot. The other thing I want to talk about here as well is taking a look at others' dominance versus USDT and USDC. So this is the dominance of all other cryptocurrencies minus Bitcoin, minus Ethereum, right? It's taking a look at the entire altcoin market, really the juicy part of the altcoin market, the small, mid caps, and even some of those large caps that aren't Bitcoin and Ethereum. And it's dividing that dominance by stablecoin dominance, including USDT and USDC. Now, why is this chart important here? The reason it's important is because we can see over time, essentially, the risk premium people are willing to pay for altcoins versus the existing stablecoin liquidity in the market. It's important to garner this metric because it allows us to see whether or not there's room for future expansion, at least according to history, versus the amount of dollar liquidity in the market. And as we can see here back in June, December of 2022, as well as in June of 2023, altcoins versus stablecoin liquidity were very oversold in accordance to this kind of way of perceiving things, right? And I think it's important to really look back and see, what we used to pay here for altcoins back during 2019 to 2021 versus that stablecoin liquidity. And we can see here, this is again another kind of fresh perspective, that there may be more room for upside. However, right now, the prior range of support here from March of 2020 here towards May of 2022, which got snapped here during the collapse last year, or back 2 years ago in 2022. Essentially, that is now right now serving as resistance, but it doesn't mean that it's always going to be that way. We need to clear through this level here. We need to get a nice weekly close, ideally maybe above 2%, so that we've got that clear confirmation that, hey, market is likely ready to take this up to 4%. Right, on the metric, which means that essentially for every amount of stablecoin dominance in the market, we are seeing essentially there's an increase here of around 2% from the current range up towards around essentially 4% for altcoin dominance. A fancy way of saying that essentially people are paying a higher premium for altcoins versus stablecoin liquidity, right? So this is, again, another metric you guys can add here. You can see the symbol up here in the top left if you guys want to add it to your watch list on TradingView. Again, another gem of a chart here. And so far, the trend is blue since back here in July. It's just a matter of whether or not we're really going to be able to hold at this range. So far, it's not looking too bad. We might be able to start whipsawing higher and be able to continue higher. The question is, though, as we'll get into the conversation here on our point 2, is there going to be that kind of dominance when it comes to Bitcoin? And more importantly, is Bitcoin and the ETF going to continue being the success that people are hoping it's going to be, right? This is a big topic I want to discuss here. But before I wanted to chat about that, as you guys are probably trading in and out of altcoins, if you're going in from Bitcoin to altcoins, if you're doing any kind of activities in the crypto space, if you're yield farming, getting yield, all of these events here can be seen as taxable events in the crypto space. And unfortunately, a lot of people wait to the last minute to plan for taxes, and some people are unfortunately not filing their taxes in the United States and other jurisdictions. It's important and vital that you guys make sure to report your taxable activities to the IRS or effective tax authority. And that's why I want to spend some time to let you guys know that there's a way to do it much simpler, and that is through CoinLedger. CoinLedger is our tax partner here on this channel. They're one of the best on the market when it comes to user experience and building a simplified tax platform that allows you to plug in all of your wallets, all of your exchange APIs without trading functionality, and essentially get all of your transactions in one place, getting a full picture of all your activities so that you can have accurate tax reporting at the end of the year. It is absolutely essential to do this, guys, not just because it's important to report on gains or any income you've made, but also if you happen to have lost money in places like the United States, you can write off those losses. But if you don't report them in that tax year, you will not be able to do it the next year. So you have to be on top of these things so that you can essentially in the future maybe even pay less taxes if you do reporting possibly the right way. So I definitely recommend you guys check out CoinLedger. They've got a really great platform that makes the experience simple. And once you really kind of get all of your wallets and exchanges set up, year by year, it's much simpler to do your taxes. Everything is tracked and essentially generated for you, where you can generate your tax forms and plug it into TurboTax. You can send it off to your tax accountant, however you may do your taxes on an annualized basis. I think that as we approach tax season here, you guys need to keep this on your radar. So check out CoinLedger down below, and you guys can get 10% off at the link down below. But I want to go ahead and dive into this next topic here, which is talking about Bitcoin. You guys probably know, as I've talked about for the past couple of weeks, and unfortunately, everyone's going to believe, this is a bit of a subjective topic, everyone's going to view the ETF how they want to. People will have a bullish or bearish bias here. I have no doubt that, yes, at the end of the day, I'm being a bit critical here. I'm setting my standards kind of high. But I have to be honest with you guys here. The reason why I care about this is because I understand that markets are inflows and outflows. I understand at the end of the day that if we don't get a massive surge of demand from these ETFs, the pricing in that we've had here for the past year, right? Really since back here in January 2023, this rebound in price has been mainly led off of assumptions of a Bitcoin ETF coming in. A lot of that may be potentially faded if there aren't a lot of inflows coming in. So let's go ahead and actually talk here about two things. First off, price action. Price action here is relatively neutral since back in December. Since the launch of the ETF, we saw the fade from around 48K down to 42K. And while that obviously didn't look good on the weekly time frame, I have to be honest with you guys, price is holding sideways now. It's not some doomsday collapse of any sort, but it's certainly not this massive surge of liquidity that people had expected. What we've mainly seen is definitely some new inflows, more Bitcoin being stored in ETPs than there were before the ETFs. That's not really a surprise, but not a substantial amount when you factor in GBTC. Now, I understand we've talked about this a lot, but essentially, there's been an outflow of existing ETF products, mainly from GBTC, but also from alternative ETFs here, like the Purpose Bitcoin ETF in Canada from around 35,000 BTC, more than 35,000 BTC, down below 32,000 in holdings. So that's a net outflow of just one of many ETP products, even outside the United States, that are going into the cheaper, lower fee products that launched amongst the ETF applications that were approved. And if you aren't factoring in these data points, you're not going to get an accurate reading on how ETF flows are looking. And this is a big point I want to bring up here, that if you really factor for GBTC, in the past few days, back on the 29th and 30th at the close of January, we saw some big days, saw about 6,000 BTC, 5,600, even when you factor in for GBTC. But then afterwards, we start to get back down here towards around 1,000, 1,800. So overall, there's positive flows. I get that. And that's to be expected here. We're in the first few weeks of this product launching. This is the big point where all that capital that was supposedly at the floodgates, ready to come in and buy Bitcoin and just scoop up all the existing supply, as many people told us, well, that should be happening now. But what we really saw here, if we look at the numbers, is only a net inflow of 36,404 BTC. Because if you account for the BTC that came out of the existing Grayscale Bitcoin ETN product that's now an ETF, but has a much higher cost of fees, well, people have essentially moved or rotated their positions into the lower cost ETFs. And I talked about in this past month's newsletter, there's a big misconception that people have about this wash trade rule where essentially you can't go from one ETF product to another. That's not true. The way that people interpret that is a bit like, I would say the way that people have been projecting that is misleading at best. At the end of the day here, guys, people have an ability to go from one ETP product to another. It's just a matter of if they have losses. So if you want to understand that a bit more, I don't have all the time to talk about it here today. I don't want to bore you guys with tax law, and I'm not an actual CPA, but I've talked to people who are CPAs. I've done my research here around the wash trade rule, and that's not an excuse as to why people can't move from these ETP products. And you see a clear trend here on inflows into these new products and outflows from the existing GBTC product. But the main point here I want to get to, irrespective of where you stand, is that we haven't seen some massive surge of liquidity, at least by most traditional standards here. 36,400 BTC is definitely not a negligible number, but it's not what people expected. It's not the massive floodgate of capital that was just going to come in and scoop up all the BTC. We need to wait for the long game here. That's at least what the bulls have moved the goalpost to now. Instead of this big surge and the price within 60 days is going to go to 100,000 BTC and beyond to new all-time highs. Now it's the long game. And I think that that's a very fair point to consider here. I think it's why Bitcoin's price is still testing the waters here. It's still sideways because the inflows are not terrible if they keep up at this pace. If day by day here for the next 365 days, now we have a vehicle that is purchasing 1,000 to 2,000 Bitcoin on a daily basis, that's definitely good news for the inflows and outflows. That would very much meet in line if we kind of do the math here and look at some of the previous results we discussed over this past year. If you look at the Galaxy digital research piece that Charles Yu did, which I think was probably one of the best and realistic in the space, he called for about $14 billion of inflows. And at current market rates, if you had around that much BTC coming in, you're going to get somewhere in that ballpark around $14, $15 billion of inflows, which again, I think speaks to how accurate of a reading it was, if anything. Like, it was much more conservative than some of the pie in the sky numbers that people just tossed out. So I think that there's a chance that that could play out, and it is definitely significant to a degree, and we should keep our eye on it here if we continue to maintain those inflows. However, if you get some of those red days like we had, unfortunately the chart doesn't show it here because you can only showcase so many days. We had some serious outflow days. If GBTC keeps up here, and outside of this, well, you just don't see people coming into ETF as people expected, then that's going to be a problem here, because after that, what's the new narrative? What's the new thing that's going to drum up Bitcoin? And this brings me back here to the altcoin topic. I think that's what altcoins are waiting for here too, because you're not seeing some massive surge of stablecoin liquidity. And while there's room for that risk premium for altcoins against stablecoin liquidity, you are likely not going to see that altcoin cycle unless there is a surge in Bitcoin's core value here, because BTC pairs still play a large role here if you're looking at a lot of the major altcoin markets like Binance. So it's important to keep that in mind here, that again, when there is that over increase in the premium of Bitcoin's price and its valuation, people start selling it and wanting to recycle into altcoins. That's just how it tends to work here. We've seen that time and time again. We saw it in 2017, we saw it in 2020. I have no doubt that that's probably what's going to play out. So we need to see whether or not that ETF is actually going to be a big deal. So far, I think it's relatively neutral. And the inflows kind of show that. If you really look at the real numbers, not the headline figure of $7.7 billion of Bitcoin or 180,000, but rather the real net increase of 36,000 BTC from institutional capital that wasn't already exposed to Bitcoin, ETNs, or ETB products. So I remember a good amount here, guys. But again, we're going to have to continue to watch those inflows. Definitely an improvement from all those negative days we were having, but we have to see if this is going to keep up here over the next couple of weeks. And we'll be able to see that really, I think, in price action. The market's going to tell you that. So let's go ahead, dive into some of the macro topics here, guys, because there are some really interesting things going on that I think you guys need to be made aware of here. The first thing is taking a look here at oil prices. Now, oil, unlike back here in the summer, after bouncing off the 200 week, cleared through that 200-day moving average and rallied on through the summer towards $95 a barrel. After a nice surge here off of the 200-week moving average, we got shot down heavily at the 100-day moving average, a clear 7.35% rejection, one of the worst weekly candles we had since back here in October of 2023. And now we are having a weekly open here right down at the 200-week. I have to tell you guys, as someone who is rightfully pointed out the stubbornness for price to break below that 200-week and to be worried a little bit about continued reaccelerations, right? This has been the weakest response so far, really in the past year, I would say, for oil's price. And this looks very well like it has the ability to finally give us what we have yet to see, which is a weekly close below the 200-week. If that plays out here, guys, I think that will not only mean that the Fed has won in the fight against inflation, but it's probably going to mean something that a lot of people don't expect, which is that in the winning of the fight against inflation, you're likely stepping into a recession. Right? Oil breaking below its 200-week and really starting a further continued decline here speaks to something, and that is a weakening in the economy, right? So it is important to keep that nuance in mind that it's kind of a catch-22 as we've talked about over the long run. I'm not saying that equities need to correct 50%, but you're probably going to have some kind of cool down of some sort in the economy. You're going to have a cool down in earnings expectations. So just keep that in mind here. I think that that's something that we need to keep on our radar, whether you like to trade commodities or even track oil prices. It's an important thing for the broader performance of macro assets. The other thing as well here is we are seeing a normalization in the bond market as essentially yields are starting to cool down here. This is a signal that the market, or the bond market particularly, is pricing in Fed rate cuts over the long term. This is to be expected as there has been more conversation around this topic and the Fed potentially doing its job. Oil coming down here and not being able to really break to new relative highs is a sign of that as well. But the one thing I want you guys to, again, keep your eye on here is what's going on here with the yield curve. This is your ultimate indicator here. And while we've had a little bit of a decline here over the past week, the yield curve re-inverted more over the past week. We've had these kind of moves before. The trend right now is blue. It's going up here. If we take a look at the biweekly time frame here again, right? Not very frequent. You hold a long blue trend like this. Monthly time frame as well. We got the blue flip here. It starts to get rid of those anomalies, guys. And when you get that blue flip, you are likely starting on the trajectory towards a recession. So again, the times are good right now. Speculate to your heart's desire, but make sure that you don't get caught being in love with positions and setting your sights too high, guys. I only say that here to be your friend, and I say that because I've been through it before. When you get too caught up in the narrative, when you get too caught up in your positions and your expectations for where things can go. We're all human. It can happen to anyone. No one times the market perfectly, but when you can lean into these metrics, you're going to start to see the very clear signs that tell you, okay, I need to be on edge for the next few months. And I need to take profits when there are good times and wait for a little bit more blood in the streets and then eventually greener pastures, right? My point here, again, just to really put it simply, guys, is that as this trend has flipped blue on the monthly time frame and on a lot of the shorter time frames as well, especially when we zoom out to this longer term time frame, you can see when the yield curve inverts and accelerates back higher towards its target range of around 2 to 2.7%, that is your window into a recession in the coming months. So just bear that in mind here. This has been one of the truest indicators throughout history. And I think you're seeing here dollar-related weakness here, right? Well, we've got over the past couple weeks a reacceleration of the dollar. Let's see how it does at that 100-week moving average. The 100-day moving average. It's Monday, guys. I don't have coffee. I sometimes get the labels wrong. I'm going to always make sure I correct it, though. Don't need to do any jump cuts. I'm just going to keep going. I want you guys to know here again that I really care about this and stuff. It's the main thing though is that generally at the same time when we've got this acceleration over the past couple of weeks, I think that this is coming down at the 200 week. The response is remaining relatively weak right now until we clear through those moving averages. All right. Right now, I got to believe that this is probably going to face resistance of some sort, similar to what we saw here back in May, here in March of 2023, and here in January of 2023. And if we can't clear through that 100-day moving average, then we're likely coming back down to the 200-week. And that's indicative of the fact that the Fed is probably loosening its monetary policy versus the prior expectations against other global central banks. So again, definitely interesting times here. Small but steady signs here of a coming recession over the next couple of months. So again, we just got to keep vigilant here when we're building our positions here. And to think that this won't have an impact on Bitcoin or crypto, I would say to keep cautionary when people tell you stuff like that, guys. Remain cautious, remain vigilant, and understand that it's your capital at the end of the day. People like myself are just here to give you our thoughts and perspectives. And hopefully you can filter out who are the ones who are honest, who are there to give you their blunt truth and to report as accurately as possible. So the other thing I want to talk to you guys about is I know we talked a little bit about taxes earlier. And another thing that you guys should keep in mind is that if you're, for example, even if you're actively trading, but if you're an active trader, if you're a long-term trader, having to deal with taxes on an annualized basis can be a big burden. It can really cut into your gains that you make when you realize any gains on positions. And while, again, using a platform like CoinLedger can be really great for that actively traded portfolio for maybe the majority of your capital, it is also very good to start taking advantage of tax-advantaged accounts that allow you to prepare for retirement. And that's why I want to talk a little bit about our other sponsor here, our partner on the channel, and that's Capital. Now, if you guys are buying and selling crypto, if you're trading commodities like gold and silver, I definitely recommend you guys check out Capital, the link down below. You guys will not only get $100 when you sign up for an IRA account through Capital, but outside of that, they've got a wide range of cryptocurrencies where you can essentially long-term invest, you could trade actively, and any gains that you make in that account will not be taxed until you actually close the account out into retirement at a probably much lower income bracket as you're going into retirement. So this is a really cool thing. IRAs or individual retirement accounts are a great way to start planning for retirement. You can make contributions every single month into it. And I definitely recommend while you talk to a tax accountant and everything, what's really great is they have programs where you can roll over your existing 401k, TSP, 403b, and even start an entirely new account if you want. So I definitely recommend you guys check the link down below in the description. Again, you'll get $100 if you sign up on the platform. They've got a whole range of cryptocurrencies here that you can invest in, from established names like Bitcoin and Ethereum, all the way down to Solana, XRP, Cardano, Avalanche, Dogecoin, Chainlink, Polkadot, you name it. You can go through the list and see if it has the right coins for you. And if it does, maybe consider setting up an account today. But that's going to be it for today's video, guys. We had a really jam-packed Macro Monday here. We talked about some of the signs around the altcoin market that we're looking for. We talked about a weekly analysis of the Bitcoin ETF flows. We're going to continue to keep that on our radar here to continue seeing whether or not we can really maintain a full-on bull market, as some people are hoping for, and also keeping an eye on those early-stage signs of a potential recession. If you're keeping all these things on your radar and more, guys, you're definitely on the right side of things, in my opinion. I think you're going to be right on the dot with being able to prepare for what's going to happen in 2024. If you enjoyed this video, consider dropping a like. It is one of the best ways you guys can support the channel. You can also check out the links down below in the description. But I will see you guys right back on this channel on Wednesday at 6 a.m. Eastern Standard Time. Take care, everyone. I'll see you all later.